Welcome to Trading the Market with Index Exchange Traded Funds. I'm Rick Swope and I'll be your host for this video. Many traders and investors like to employ strategies that follow an index, whether that be a securities index for stocks or bonds or maybe even a real estate index. But an index is not directly tradable. So what choices would you have? Well, first of all, you could consider creating your own proportional index portfolio. But that would be a lot of transactions typically and could have a lot of capital requirement that comes along with that. You could also consider exchange traded funds or ETFs, which are designed to replicate the performance or track an index. You could think about options on an index or even options on an index ETF. Many of them have option strategies available for you. And then finally, if you're familiar with futures, you could consider buying or selling futures on an index. These are all considerations other than trying to create your own index. Since a lot of people are familiar with the idea of mutual funds, let's talk about some characteristics of both mutual funds and ETFs. And then shortly what we'll do is we'll look at key differences between them. But basically there are common characteristics that you'll find with funds, whether they are mutual or exchange traded. First of all, they tend to be a managed basket of securities. And that basket can include stocks or bonds or really any type of asset that helps the manager replicate the performance of whatever it is they're after. Now, some mutual funds are designed to outperform the market. They're not necessarily index. And in that case, the manager makes a decision what to include in that basket so as to get the best performance based on the objective of that fund. Then the investor or trader will own a proportional share. So you'd actually buy shares of the fund. And your participation in that fund is correlated to the number of shares that you own, which is how much capital you're investing into that fund. The fund will then calculate a net asset value. That is the total value of the portfolio divided by the number of shares. And that net asset value is the tradable value for mutual funds. Now, an exchange traded fund, as we'll see in just a moment, trades on an exchange and has a bid and an ask. A mutual fund, when they calculate net asset value at the end of the day, that is the value or the way that the shares are valued so that you can make buy and sell decisions. And then finally, the fund manager will receive a management fee. There's going to be a management team, and depending on how aggressive they are or how much work they have to do, research and so forth, there will be a management fee associated with that fund. I say how aggressive they are because index funds are not designed to be aggressive per se, except they're designed to replicate the performance of an index, whereas other types of funds may be designed to outperform the market or some benchmark as much as possible. And there's a lot more requirement of the management team, and therefore the management fee is going to reflect that. Now, as we mentioned, let's take a look at some of the differences or comparisons between mutual funds and exchange traded funds or ETFs. So with mutual funds, you would buy or sell directly with the fund company. The fund company is the one that offers the shares. An exchange traded fund trades like a stock in the sense that it is listed on an exchange and you are buying or selling with other investors. So there are other participants out there. It might be an individual investor or trader who's selling their shares. Could be an institutional trader or an investor. So mutual funds directly with the company, exchange traded funds or ETFs on an exchange. Mutual funds are also priced at net asset value after the market closes. So the constituent assets within that fund are priced based on their trading activity for that day. And then a end of day NAV or net asset value is calculated. With an ETF, it's priced throughout the day. There's actually a bid side and an ask side. So there's a list of buyers and a list of sellers. And on that open exchange, that price moves back and forth in the same way that you would see with a stock. With mutual funds, many are actively managed for long-term returns. So there is a desire to get an outperformance factor above and beyond the market return. And it's numerous how many different objectives and strategies there are. So it's not one particular strategy that's employed for a mutual fund. With an exchange-traded fund, most are index funds that are designed to track something. They're designed to track, for example, the S&P 500 or the Dow Jones Industrial Average, or maybe they're designed to track a real estate index or even a geographic index. But they're designed to follow something. That's one of the characteristics of an exchange-traded fund. With mutual funds, many of them are traditional index funds. You can see indexes in both mutual funds as well as ETFs. And with mutual funds, you tend to see more of the traditional indexes, whereas with ETFs, there's a wide range of indexes that are available. As I said, you may see commodities. In fact, we'll see in just a moment how on the E-Trade ETF screener, you can search for specifically ETFs that are designed for various indices. And then finally, for long-term investing, that would be mutual funds. Mutual funds are not designed for short-term trading for a number of reasons, but not the least of which is because it doesn't trade during the day. You have to wait until the end of the day. Whereas ETFs do appeal to both long-term investors, but also short-term traders. A short-term trader may trade the ETF itself in the same way that they may trade a stock, or they may consider options on an ETF if that particular ETF has options available. Now that we've drawn the comparison between mutual funds and ETFs, let's consider index ETFs a little bit more closely. To recap, ETFs are traded real time throughout the day on an exchange. So if you're looking to trade at 10 o'clock in the morning market time or 2 o'clock in the afternoon, ETFs will have real-time quotes available to you. You don't have to wait until the end of the day. Secondly, many of them offer options. Not all ETFs offer options, but many do. And so option strategies are going to be available to you with an index ETF, should that index ETF offer options. And there you could look at bullish strategies, bearish strategies, or even neutral strategies. ETFs offer you the ability to use various order types. If you are familiar with trading stocks, you may be familiar with things such as stop orders or stop limit orders or contingent orders that have various contingencies associated with them. These are not available with traditional mutual funds, but you may use these with ETFs. And then, as with a mutual fund, ETFs give you the transparency of portfolio and objectives. But that's important to know. You should know if you're going to be trading an ETF, you should know what the objective of that ETF is. What does the portfolio consist of? What are the top holdings and what is the percentage of each of those assets in the top holdings? These are all transparent to you as a trader, and it's important that you take a look at that before you invest or trade in an ETF. That information is available for you through E-Trade. We try to make that as easy for you as possible to know what you're working with. And finally, as we begin to wrap up this introduction to trading the market with index ETFs, I want to make sure that we point out the ETF Search Tool that we have available to you at etrade.com. When you go to the ETF screener or the ETF Search Tool, there are a number of different things that you could search by. There are nearly 3,000 ETFs in the total universe, and you could search by a variety of different parameters. You'll notice here on the illustration, one of the things that you could search for is the fund characteristics. There are index, a fund of funds, life cycle funds, etc. But since we're talking about index here, We have selected that, and we see that there are 1,783 that match the index search criteria at this point of screening. And examples that you might see are equity ETFs, which will follow things such as the Russell 2000, the small caps, mid caps, S&P 500, and so forth. You may see commodity index ETFs that might track things such as gold or silver. There are bond ETFs for fixed income that will have a variety of different bond portfolios that you may want to consider. Real estate's another possibility. But these are just examples. Don't want to limit it to just these 4 categories, and would certainly encourage you to log on to your E-Trade account, look at the ETF Search Tool that we have at etrade.com, and really work with that to get to know it. See what types of things might help you find an ETF that fits your trading strategy. For now, I want to thank you for joining me for this video, Trading the Market with Index ETFs. Be sure to bookmark etrade.com/education, and you'll find many live and on-demand sessions available in our library of education for traders and investors.